Most people discover the S-Corp for one reason, and one reason only: slashing that brutal self-employment tax that quietly devours 15.3% of every dollar you earn. And look, that benefit alone is real, it's significant, and if you're not using it, you are absolutely leaving money on the table. But here's where it gets genuinely interesting. Because the S-Corp does something most business owners completely overlook. It creates a legal fiction where you are simultaneously the employer and the employee. That's not a loophole. That's the tax code working exactly as intended, and understanding it changes everything. This dual role you play inside your own S-Corp is the gateway to one of the most underutilized strategies in small business tax planning, something called the accountable plan. Think of it like your business finally paying you back for all those personal resources you've been quietly funding out of your own pocket for years. An accountable plan is essentially a formal employee reimbursement arrangement where your company, acting as the employer, legally reimburses you, acting as the employee, for the business use of personal assets. The business gets a legitimate deduction, you get real dollars back in your pocket, and nobody's doing anything remotely shady. The most classic example is the home office. And before you roll your eyes and say, "I've heard this one," hear us out, because most people are doing it wrong or skipping it entirely out of fear. Done correctly through an accountable plan inside an S-Corp, you can reimburse yourself for a proportional share of your mortgage interest, rent, utilities, insurance, and even repairs. Here's the part that makes tax professionals genuinely excited. Those reimbursements are tax-free to you as the employee and fully deductible to your business as the employer. You're not creating income. You're not triggering self-employment tax. You're simply moving money from one pocket to the other while the IRS watches and nods approvingly. Now, let's be honest about why most business owners miss this entirely. The accountable plan sounds intimidating. It sounds like audit bait. And frankly, nobody explained it to them when they formed their S-Corp. The irony is that the IRS doesn't just allow this strategy. They literally wrote the rules to make it work, outlined under Treasury Regulation 1.62-2. The requirements are actually pretty straightforward. The expenses must have a legitimate business connection. You must substantiate them with documentation, and any excess reimbursement must be returned to the company. That's it. Keep receipts. Track the square footage of your home office, run it through payroll or a formal reimbursement request, and you're operating entirely within the rules. Beyond the home office, the accountable plan can cover your personal cell phone used for business, your personal vehicle mileage, your internet bill, even a portion of your utilities if you're working from home. Every single one of those reimbursements exits your business as a deduction and lands in your personal account completely tax-free. Historically, business owners who've consistently used formal reimbursement plans inside their S-Corp's report, recovering thousands of dollars annually that would have otherwise just evaporated into personal expenses with zero tax benefit. The difference between a business owner who knows this and one who doesn't isn't ambition or hustle. It's simply having the right structure in place. The misconception we hear constantly is that this feels aggressive or risky, and we want to address that directly. There's nothing aggressive about being reimbursed by your employer for legitimate business expenses. This is the exact same mechanism that Fortune 500 companies use to reimburse their executives for business travel, home office setups, and cell phones every single day. What makes this strategy truly powerful is the discipline and documentation behind it, not the idea itself. You need a written, accountable plan document, consistent reimbursement requests, and clean records. Because the structure is what separates a legitimate tax strategy from a messy mess that you don't want explaining to an auditor. The broader lesson here is that most small business owners are operating with the shell of a good tax strategy, but none of the interior architecture that actually creates savings. The S-Corp, without the accountable plan, is like buying a rental property and never charging rent. The vehicle is there, but it's not doing its job. Discipline, documentation, and the right structure matter infinitely more than the size of your ambition or the boldness of your deductions. The business owners winning the tax game aren't taking risks. They're simply following the playbook that already exists consistently every single year. If any of this sparks something for you and you're ready to build a smarter financial foundation, whether that's through real estate investing, home contracting work, or connecting with the right lenders. Check out our links in the description below and let's get you started.